So, let's talk about separate financial statements under PS27. Learning objectives. Describe the applicability of PS27. Describe the measurement bases allowed under PS27. Scope. PS27 does not mandate which entities should produce separate financial statements. Hindi siya nagkukumpil. Walang mandate galing sa kanya pero take note of this second bullet point. An entity shall apply PS27 in accounting for investments in subsidiaries, joint ventures, and associates when it elects or it is required by local regulations to present such separate financial statements. So, PS27, na-apply siya dito sa investment subsidiaries, joint ventures, and associates. There are two instances when an entity will use PS27, either kapag gusto niya, when it elects, kapag bet niya lang, di ba? Or second, when the local regulations, when the regulatory body in which in the place where the entity is situated requires to do so na mag-present ng separate financial statements. Ano ang importansya ng PS27? Separate financial statements are those presented in addition to consolidated financial statements or in addition to financial statements in which investments, associates, or joint ventures are accounted for using the equity method. Separate financial statements need not to be appended to or accompany those statements. So, ganito ang importansya ng PS27 kasi kung makikita nyo dito, itong si investments in subsidiaries, itong si joint ventures, itong si associates, para siyang anak which was produced because someone bigger, let's say the parents, decides to produce that anak like investment in subsidiaries. May tinatawag tayong parent kung saan na pwede siyang magkaroon ng subsidiaries like Lopez Holdings, 'di ba? Under sa kanya si Meralco, under sa kanya si ABS-CBN o parents may subsidiaries siya ngayon kung nag-present ng financial statements. Ang nangyayari dyan, consolidated na yan. May nakalagay dito, consolidated yan. What do you mean consolidated? Kino-combine yan, iniisahan na lang para isa na lang yung presentation. So, yung mga FS ng mga subsidiaries na to, in terms of investment in subsidiaries, yung mga FS nila, binibigay nila yon kay parent. Para si parent, i-combine yun, i-consolidate niya para ang pag-present iisa na lang. Ganon yung nangyari. So, consolidate financial statements. Here comes PS27. What if ang gusto lang ni user, like for example, regulatory body siya, ang gusto lang makita ni user is kung ano yung separate performance ng subsidiary na to. Kung yun lang ang gusto niyang makita, hindi yung consolidated, may particular gusto siyang makita, itong subsidiary or itong subsidiary kung anong performance niya. Kung ano yung kanyang FS, for example, yes, parent, marami kang anak pero gusto mo lang makita yung performance ng anak na to. Ito lang gustong makita, so pag titingnan mo ang consolidated, mahihirapan ka kasi consolidated, combine na yan. Mahihirapan kung i-trace words amounts from those consolidated FS ang galing sa particular entity na to. Here comes ito na si PS27 kung saan when the entity elects or when it is required by the regulatory body kung yung anak itong si subsidiaries, yung anak yung joint ventures, yung associates, they can present separate financial statements for their own, sa kanya lang. Kapag i-consolidate yan, meaning, nagmi-mix na yan. Yan kinukumbay na yan, so mahirapan na yan which amounts, which transactions pertains to this particular entity. Particular subsidiary, particular joint ventures, particular associated. So, to make things easier, magpe-present na lang sila yung sariling separate FS para ipakita nila. Ito lang yung transactions ng pertaining to us. O mas madali yung buhay kasi di mo na kailangan i-trace pa doon sa combine, consolidated FS, papakita na lang sa'yo yung separate. So, preparation of separate financial statements. Separate financial statements shall be prepared in accordance with all applicable PFRSs except as follows. Investments in subsidiaries, associates, and joint ventures are accounted for in the separate financial statements, either at cost, in accordance with PFRS 9, financial instruments, using the equity method. The entity shall apply the same accounting for each category of investments. So, our next topic, which is investments in associates and joint ventures under PS 28. Learning objectives. Define an investment in associate. Define the accounting requirements for investments in associates and joint ventures. Definition of terms. Associate. An entity, ano nga ba itong associate an entity? Including an unincorporated entity such as a partnership over which itong entity na to may investor, and that investor has significant influence over the entity. This investor has significant influence. Investor significant influence over the entity, yan basically ang isang investment in associate, si investor may significant influence kay entity. Now, what is significant influence according to PS 28? Significant influence is the power to participate on the financial and operating policy decisions of the investee, the power to participate in the financial and operating policy decisions ng invest niya. So, si investor, because of significant influence over in the entity, the investee, may power to participate siya, but take note, it is not control or joint control over those policy. Significant influence lang. Significant influence. Significant influence is presumed to exist if the investor holds directly or indirectly through subsidiaries 20% or more of the voting power, meaning ordinary shares and preference shares wala siyang voting power. So take note, like 30% ownership of shares tapos yung shares preference hindi pwedeng maging significant influence because as we know, preference shares wala yang voting power. And may voting power lang is yung ordinary shares. So, dapat si investor merong holdings. Ibig sabihin, the investor holds 20% or more of the voting power. Meaning, 20% or more ng shares na may voting power over the investee. Now, there are instances where hindi naabot yung 20% requirement. So, automatic ba na walang significant influence? Depende kasi, unless it can be clearly demonstrated that this is not the case. 18% yung ownership over the shares with voting powers. Pero it can be clearly demonstrated that the entity, the investor, still has significant influence over the investee. Then you can still see na may investment associate yan. Pero it can be clearly demonstrated that there is significant influence, then you can say na may investment associate pa rin yan. Applicable pa rin si PS 28. The following evidence of existence of significant influence by an investor. The following may provide evidence kahit na yung 20% is not achieved is less than ownership interest over the voting powers is less than 20%. Kahit di ma-reach yung 20% threshold, pero it can be clearly demonstrated that there is a significant influence. So, investor just the following, then you can still stay na applicable pa rin si PS28. Example A. Example A, representation on the board of directors or equivalent governing body of the investee. So, may representation ka doon. So, ibig sabihin, you can still influence the decision of the board. Kasi basically, yung board yung mamamahala over the company. B, participation in policy making processes, including participation in decisions about dividends or other distributions. So, sa board pa rin yan. Material transactions between the investor and the investee. Like for example, yes, you have 18% ownership over the investee. Si investor may 80% voting ownership interest with voting power over investee. Itong si investor, siya pala yung primary supplier ni investee ng kanyang raw materials. Materials transactions between the investor and investee. So it turns out that this investor is primary supplier of the raw materials na ginagamit in investee sa kanyang operations. So in that case, kahit na hindi na reach yung 20% threshold, pero may material transaction between the investor and investee, then you can simply say that there's a significant influence. Equity method. Investments in associates or joint ventures are accounted for using the equity method. Under this method, the investment is initially recognized at cost and subsequently adjusted for the investor's share in the changes in the equity of the investee. So meaning yan, yung subsequent measurement under the equity method is kung ano yung mga transactions that affects the equity of the investee. Yun yung magkakaroon na effects sa yung investment in associate or joint ventures. Those transactions that have an effect over the investee, magkakaroon yun effect sa iyong investment. Graph. Gagawa ka lang ng T-account, tas ilagay mo dito yung investment mo kay associate, tapos unang ilalagay mo na amount mo dito yung beginning balance. Yung cost mo then ang mangyayari for the reporting period. Tignan mo kung ano yung mga changes or mga transactions that affects the equity yung investee mo. Share in associates. Profit or loss. Effect on investment in associate. Increase for share in profit or decrease for share in loss. Effect on investment income. Increase for share in profit, decrease for share in loss. Dividends. Decrease, no effect. Other comprehensive income. Under effect on investment in associate, increase for share in gain or decrease for share in loss. Under effect on investment income, no effect. The share in OCI is included in the investor's OCI. Next, preference shares issued by an associate. If an associate has outstanding preference shares that are held by parties other than the investor computes its share of profits or losses after making the following adjustments. When we're talking about ownership in a significant influence, yung voting power. Anong share ang may voting power? Ordinary shares. Kasi ang preference shares, usually, wala Wala yan sa anong issue nito when it comes to in this particular standard. There's a reason why it is called preference share. Preferred siya. Preferred saan? In certain instances, preferred siya. For example, kung magkaroon ng distribution of dividends, preference share yung inuuna kasi nga preferred siya. From the name itself, another pag nagkaroon ng issue ang company, magsasara ang company, yung unang magka-receive ng share nila, yung liquidating ng company, preference share din, kumbaga si ordinary shares, residual lang ang ma-receive niya. Kung ano yung matira, hindi kay ordinary shares mapupunta yun. Yung reason, so, example, 100 pesos tapos yung preference share na pag-usapan, for example, 10%. Yung sa kanila, so 10% sa 100 is 10. So, ito mapupunta sa preference share. Ngayon, kung may residual yan, ay ordinary shares. Mapupunta ganyan ang nature ng preference share and ordinary shares. In order terms, for example, 10%, I mean 10 pesos, automatic, mapupunta kay preference share. Ganun ang usapan nila now. Papaano if 10 pesos lang sakto ang income? Idi yung buong 10 pesos mapupunta kay preference share, kay residual walang mapupunta sa kanya, at kay ordinary shares walang mapupunta sa kanya. Bakit? Kasi si ordinary shares residual lang ang marireceive niyan. Kung may matitira, good for them. Kapag wala, edi bad for them. Kasi residual yung nature na nare-receive nila. Kung ano yung matira after distributing sa preference, yun yung sa kanila. In this case, ang napag-usapan, 10 pesos yung kay preference from the income, saktong 10 pesos yung income. So, walang mapupunta kay ordinary shares. Diba? Discontinuance of the use of equity method. An investor starts to apply the equity method on the date it obtains significant influence and ceases to apply the equity method on the date it loses significant influence. On the loss of significant influence, the investor shall measure at fair value any investment the investor retains in the former associate. The investor shall recognize in profit or loss any difference between the fair value of any retained investment and any proceeds from disposing of the part interest in the associate, and the carrying amount of the investment at the date when significant influence is lost. So kailan nag-start yung mag-obtain ka ng significant influence? Then that's the date that you will start to apply equity method. Kung kailan nag-cease yung significant influence, that's the time that you will cease using the equity method. Classification of retained interest. Following the discontinuance of equity method, the retained interest shall be classified as follows: loss of significant influence due to an accounting treatment. Under loss of significant influence due to decrease of ownership interest below 20%, and financial asset at fair value under PFRS 9, and increase of ownership above 50%, investment in subsidiary under PFR 3 and PFR 10. Reclassification of cumulative OCI. If an investor lost significant influence over an associate, all amounts recognized in other comprehensive income in relation to the associate shall be accounted on the same basis as would be required if the associate had directly disposed of the related assets or liabilities. Share in losses of associate. If an investor's share of losses of an associate equals or exceeds its interest in the associate, the investor discontinues recognizing its share of further losses. So, for example, yung investment mo kay associate as of now is 100K. Yan yung beginning balance mo for current period. So, investment associate accounting mo. Share in losses of associate continuation. After the investor's interest in the associate is reduced to zero, additional losses are provided for, and the liability is recognized only to the extent that the investor has incurred legal or constructive obligations or made payments on behalf of the associate. So, when the investor has legal or constructive obligations para kay associate or has made payments on behalf of the associate, then yung partner losses na yon, yung nag-exit, will be recognized as liability. However, if the investor has incurred legal or constructive obligation on behalf of the associate or has made payments on behalf of the associate, so in that case, yung additional losses na yan, nire-recognize mo na as liability pag present ng dalawa. Pag di present, huwag mong i-recognize yung additional losses. Learning objectives. State the core principle under PS 29. Describe the restatement procedure under PS 29. The stable monetary assumption. Under the stable monetary assumption, the purchasing power of money is assumed to be stable. Therefore, inflation is ignored. The exception to this concept is hyperinflation. So, this stable monetary assumptions provides us consistency in the reporting, meaning, because of that consistency in the financial reporting, comparable yung FS mo from that previous year sa yung current FS, hence the stable monetary assumption because of the concept of consistency. Kasi yung consistent yan, you can compare that with the previous FS. With the previous statements, comparable pa din sila ngayon. Stable monetary assumption, inflation, is ignored. However, the stable monetary assumption, the concept of this is ignored kapag mayroong hyperinflation. Inflation, out of the ordinary kasi, hindi na normal. Price level changes. General price level changes and purchasing power of money have an inverse relationship. Ano nga ba itong inflation? Basically, inflation is the increase in prices while at the same time, there's a decrease in the purchasing power of money. Meaning, yung piso mo dati, makabili pa yan ng 4 na candy. Yan yung power niya. 4 na candy ang kanyang kaya mong bilhin. Pero ngayon, yung piso mo, since bumaba ng purchasing price power niya, because of inflation, 1 candy na lang ang mabibili mo dati. 4 yung purchasing power niya. Pero ngayon, 1 candy na lang. So, inflation. If the general prices level increases, this means that the purchasing power of money has decreased, so inverse relationship. Tumaas yung presyo, bumaba ang purchasing power niya. Pera, that is inflation. On the other hand, bumaba ang presyo, hence, it will affect Now, this means that the purchasing power of money increased, so inversion baliktad. Hyperinflation. Hyperinflation occurs when inflation is very high. PS 29 does not establish an absolute rate at which hyperinflation is deemed to arise. This is a matter of judgment. Indicators of hyperinflation. 1. The general population prefers to keep its wealth in non-monetary assets or in a relatively stable foreign currency. Amounts of local currency held are immediately invested to maintain purchasing power. 2. The general population regards monetary amounts not in terms of the local currency but in terms of a relatively stable foreign currency. Prices may be quoted in the currency. 3. Sales and purchases on credit take place at prices that compensate for the expected loss of purchasing power during the credit period, if the period is short. 4. Interest rates, wages, and prices are linked to a price index. And 5. The cumulative inflation rate over 3 years is approaching or exceeds 100%. Core principle. The financial statements of an entity whose functional currency is the currency of a hyperinflationary economy shall be stated in terms of the measuring unit current at the end of the reporting period. The comparative information for the previous period shall also be stated in terms of the measuring unit current at the end of the reporting period. Presentation of information as a supplement to unrestated financial statements is not permitted. Separate presentation of the financial statements before restatement is discouraged. Restatement of financial statements. Statement of financial position. Only non-monetary items, statement of financial position amounts not already expressed in terms of the measuring unit current at the end of the reporting period, are restated when using the constant peso accounting. Monetary items are not related because they are already expressed in terms of the monetary unit current at the end of the reporting period. Monetary items are money held and items to be received or paid in fixed determinable amount of money without reference to future prices of specific goods or services. Monetary items include monetary assets and monetary liabilities. Examples of monetary assets: cash and cash equivalents, loans and receivables and their related allowances, financial assets at amortized cost, debt instrument, finance lease receivables, cash surrender value. Examples of monetary liabilities: financial liabilities at amortized cost, debt instrument, accounts, notes, bonds, and finance lease payables. Accrued expenses payable in fixed and determinable amounts of money. Refundable deposits, security deposits on leases to be returned to tenants at the end of the lease term, and deposits for returnable containers. Dividends payable. All other items that cannot be classified as monetary items are non-monetary items, except of retained earnings. Retained earnings is the balancing figure after restatement. Examples of non-monetary assets: physical assets such as inventories, property, plant, and equivalent, and equipment, and investment properties and their related accumulated depreciation. Intangible assets: financial assets measured at fair value, advances and prepayments not collectible in cash, such as advances to suppliers, prepaid insurance, prepaid rent, prepaid rent, and the like. Examples of non-monetary liabilities. Financial liabilities measured at fair value, unearned items not payable in cash such as advances from customers, unearned rent, deferred revenues, and the like. Warranty obligations to be settled by future delivery of services, example, free repair service, or replacement with other non-monetary items, example, free replacement of parts or replacement of the good purchased. Equity items such as share capital and share premium are also non-monetary items and thus restated. So, non-monetary items carried at other than cost. As a general guide, only non-monetary measured at cost are restated. The following non-monetary items need to be restated. 1. Non-monetary items measured at net or NRV or fair value as at the end of the reporting period. Non-monetary items measured at revalued amounts as at the end of the reporting period. If the NRV, fair value or revalued amount, is determined at a date other than the end of the reporting period, the non-monetary item is nevertheless restated. Restatement of financial statements. All items in the statement of profit or loss and other comprehensive income are restated. So, the formula of restatement. Historical cost nila times mo sa fraction ng current price index, which is the index as of the end of the reporting period, divided by the historical price index uses the index of the item as of the acquisition date. So, when it is impracticable to determine the historical price indices, such as for transactions recurring very frequently, the average general price index for the period may be used. So, gain or loss on net monetary position, historical cost nila. Lastly, net monetary items ending stated. Ito yung historical cost nila. Ito yung ibabawas yung restated monetary asset minus restated monetary liabilities. So, kung anong difference nila, gain or loss yon. Pag positive, gain. Ibig sabihin, tumaas ang value. Kung loss, which is most of the case, ganun kasi nga hyperinflation, so loss. To be recognized. The end. Thank you. That's all.